Thank you so much for joining us. So you've had a fairly good quarter, but your bottom line has seen a there's a dip in the bottom line. What could be the reason for that?
It's great to be with you. Yes, I think from an operating standpoint, we think this is one of our best ever quarters. A few of the key highlights were that we sold the highest ever value of residential sales that we've ever had in the company's history in a quarter. So we had nearly 1,500 crore worth of residential sales, well distributed amongst 4 new project launches, 2 here in Mumbai, 1 in Noida, 1 in Pune. We also had very good traction in some of our existing projects. On top of that, we added 4 new projects to our portfolio. With nearly 5 million square feet, which is again a very positive development. I think the main impact that dragged our profit number down a little bit is really due to the accounting methodology for the sector. So if you look at the way real estate accounting works, these new launches that we did during the quarter don't actually come into the P&L immediately, but first we have to achieve certain construction milestones, which will happen in subsequent quarters. But the marketing expense linked to those launches do get expensed out in the quarter. So because of this very significant increase in sales, so we had a nearly 300% increase in sales value during the quarter. So I think the marketing expenses linked to that somewhat impacted the P&L. We also had a couple of projects that saw some cost escalations during the quarter. So I think, we think these are relatively one-off impacts. We remain confident on the full year P&L showing good growth. But I do think that the much more important metrics that we track are booking value, which shows our top line momentum. And I think that, as I said, growing at 300% is we think, a great achievement. And the second key number is operating cash flow for a real estate company. And there also, we had one of our best ever quarters with about 650 crore of operating cash flow that led to about a 400 crore reduction in net debt and improvement in our finance costs to 8.45%. So overall, I think a lot of positives for the quarter that didn't fully get reflected in the P&L, of course.
Sure. Sir, with the RERA coming in this quarter, there has been a pause in the new launches, but for you've added like 4 new projects into your portfolio as well. So how do you see this RERA impacting you in the coming quarters, and what was the reason you could do fairly better in terms of new launches?
Yeah, I think, RERA is going to have a short-term impact of slowing down things a little bit as people wait for the regulators to get fully established, register their projects, get the RERA approvals. But I'm happy to report that we've actually been able to register almost every one of our residential projects already. The only one project we don't have registered yet is in Kolkata, where the RERA authority has not yet been set up. But in every other state, including states that very recently set up the authority, we have registered our projects. In a place like Uttar Pradesh, we, I think, were the first company and the first project to get registered there. So I think, we've clearly been working hard to make sure that we are fully ready for RERA and don't expect it to slow us down very much. And we do actually think over the medium term that RERA can be a big positive for the industry, because one of the things that I think has been hurting consumer sentiment and the overall demand environment is the lack of confidence around governance in the sector. And I think RERA will go a long way to improve consumer confidence and therefore drive improved demand. So I think, our own expectation is that there will be some short-term confusion in the market, and we have already seen that, but that this will evaporate quite quickly.
So, and if you could tell us more about your portfolio expansion in terms of residential as well as commercial, and also the new geographies if you are looking to expand into.
Yeah. So the vast majority of our focus for Godrej Properties is on the residential side of our business. We see tremendous opportunities, and the real focus for us is to build our portfolio out in the top 4 real estate markets in the country, which are Mumbai, NCR, Bangalore and Pune. The data we've seen suggests that about 2/3 of the value of all real estate sold in the country is sold in those 4 markets. So by doing well in these 4 markets, we think we would be capturing a very large share of the overall opportunity for real estate in the country. And within that, I think the goal will be to diversify into as many new micro markets as we can. And I think we've seen that, for example, very successfully in NCR during the quarter, where we added 3 new projects, 1 in Sona, 2 in Gurgaon. And I think that will be the goal across these top 4 target cities.
And finally, one final question, like on consolidation part, are we going to see any JVs or any announcements coming up?
I certainly hope so. We had 4 new such announcements during the first quarter, so 4 new project partnerships that we announced in Q1. I think the environment is such that certainly the opportunity is there because the underlying real estate market conditions are very weak. That is combined with, I think, a lot of companies not being very comfortable with the governance requirements in an era of RERA and the other changes. So I think there are a lot of opportunities that we're seeing to partner with other developers. It's up to us to be able to execute well against those opportunities. But certainly my expectation is that we will be able to deliver our best ever year for business development this year.
Well, thank you so much for talking to BloombergQuint.
Thank you. Great to be with you.
Thank you.
Thanks so much.